Welcome to Exchange Rates UK TV. It is the 15th of March 2022. Taking a look here at Dogecoin, multiple time frame analysis. Dogecoin, of course, been in a heck of a downtrend for over 300 days. I think we're getting close to like 315 days is how long it's been in a downtrend. You got to go all the way back to the month of April 2021, which is not far from where we are now. And you'll see that's where the all-time high was found, and it has promptly just kind of drifted further south from there. And from an Ichimoku perspective, it is still bullish because it is above the Ichimoku cloud, even though it's below the Tenkan-sen and the Kijun-sen. But there are some pretty good gaps between the bodies of these candlesticks and the Tenkan-sen, so that's a warning sign that you could see a mean reversion coming up. Additionally, as we get into the closer to the end of spring, early summer, you get into, I guess that's still spring. May, the 3-week candle that starts on May 9th is where a Kumo twist occurs. So if it is trending lower still into that date range, then we should expect to see a swing low established that triggers a new high. I will point out, though, that on my custom oscillator down here, these do not show up a lot, these alerts regarding arrow down and arrow up. That is a huge signal for my own trading and analysis that I pay attention to, and because they're so infrequent and it's on a 3-week chart, there's a lot of weight given to it. So I'm very, very bullish on it for that reason alone. Over to the weekly chart, volume for Dogecoin is heavily down across the board. Doesn't matter where or what you look at. Dogecoin is trading at some historical lows in its volume, and that just kind of continues to be the case. It's had 5 weeks lower. It looks like it's trying to attempt to create a break that by having a close here higher, but when we look at maybe it doesn't want to do that. No. Anyways, the volume profile going into from 2021 until where we are now, there's a pretty good gap between 11 cents and 9 cents. So there's a very strong case for it to continue to drop there. The Bollinger Bands are sitting at these extreme lows still, curling up. There's some hidden bullish divergence present between the composite index and the price chart. No divergence exists between the RSI and Doge. I'm going to get into the price levels I'm looking at here. On a daily chart, you had a lot of volume pop in yesterday, and when you look at that volume, it was the highest volume day since February 24th, and it was the third highest volume day since February 22nd. So there's a lot of volume that came in yesterday. I mean, Doge traded up like roughly 10%, but then it pulled back, had like a marginal, 2% close? Yeah. And fast forward to today, it spent most of the day trading below yesterday's open and almost made a new low. But now it's coming back up above this falling wedge pattern. That's where it's kind of fallen above. And from a time cycle perspective, using Gann cycles and Gann seasonal dates, Doge is really anywhere between roughly 2 weeks ago to the 21st of March is where we should expect to see, if not a huge bullish trend change, we should expect to see at least a broad corrective move. And as far as how high that goes, before we visit it again, I would conservatively say 16 to 16 and a half cents is where that upside potential will be limited in the near term. And as far as downside risks are concerned, definitely in the 9 cent range, 8 to 9 cent range. If it, every minute that it spends at 11 cents or lower, it really increases the risk of a flash crash down to 8 or 9 cents. I don't even know if that's a flash crash anymore, but that's just something to know and pay attention to. So, but I will update it as needed. Thank you all for watching from All Trade Exchange Rates UK TV. Please don't forget to like, comment, and subscribe.